All right. Good evening, everyone. Welcome to seventh episode of India Money Live. And today we will be discussing some famous stocks, some famous degrees in India, and then one of the hottest company in USA, which is changing how AI cycle gonna work from here on. So I just welcome you everyone and welcome Danesh. How are you doing?
All good. Very good vibes today from what has happened. So, yeah, very excited to talk about a lot of hot topics again.
Right, right. And I see you have just changed the outfit, I believe. Just allow me a second. I will be just sharing our stream with everyone. Cool, I think done. Yeah, so in case you are joining for the first time, just want to explain the format. We will be discussing some stories. We will be having some special guests breaking down one important topic. And at the same time, we will be taking your feedback, questions, and everything you want to comment honestly. So you can do comments on X, and we are also live on YouTube. In case you feel there is some lag, please do respond to us so we can fix it as a that's the plan of the stream. So Danesh, what's the first story we are covering today?
So, I think we'll talk about India's most trusted bank.
What are we talking about?
Which is the most trusted bank, do you think, in India?
Uh, are you talking about stock, the banking
Uh,
stock?
Both actually. Like, if
Yeah,
you had to
it's
name one bank, which is like, if you had to, someone had to put money on it for reliability earlier, maybe not now, it would have been this bank.
so we are talking about HDFC Bank actually. That's our first story of the day. So yeah,
So,
what's cooking here?
like, I would like to say it in this way that India's most trusted bank has an ugly secret, which
And that
is
is,
over 5 years, it has been one of the worst blue chips to own.
I think in last five
So,
years it has been a bad phase for most of the famous blue chips. But this could be the leader of everyone.
if you see, if you had invested 1 lakh in HDFC in 2021,
Hmm.
it would have been worth only around 1.05 to 1.1 lakh in 5 years. And this is while the index itself has doubled in the same period.
All right. So I believe the FD investors in HDFC Bank made three times more money than the shareholders probably. That's the
Exactly. But again, still people are still rooting for this company and saying, it's a master stroke to own it. You don't get it at these valuations ever. But that's the thing we have been seeing, right? Cheap has been getting cheaper since the last few years.
I think that's the tail. Like it is one of the most crowded trade probably, and that's been one of the reason. Like it used to happen with Kotak, I believe, in somewhere close to 2015 or something. Then it started underperforming markets from 2018 itself. I think Kotak
Yeah.
is one of the I would say one of the underrated failure stock. We don't really talk about it, but it used to be one of the expensive banking stock based on the price to book multiple. So I believe that's been the case with HDFC Bank. I was just going through number. I just want to share it with you. So uh, allow me a second. So let's first talk about anyways like what it is doing. Uh, so just want to add some things like yeah. So HDFC Bank got 30 lakh crore deposit, uh, and the market cap is 11 lakh crore. Funnily enough, SBI got 60 lakh crore worth of deposit, double of HDFC Bank. The market cap is still lower than HDFC Bank. The market cap of SBI is 9 lakh crore. And this is probably market values HDFC Bank higher because market believes that these guys can actually use that 30 lakh crore deposit far better than the government bank, or the government bank we are talking here is SBI. And that's why both are valued in this manner, right? And we are not even saying that HDFC Bank is making more money. If you see, the annual profit of SBI is 80,000 crore. But that's the case at the moment.
So, like, if you, like you're saying, right, the gap of deposits to market cap. This has reduced. This gap has reduced because of the run up that SBI has had in the recent few years. Like I think it has been the best performing banking stock, especially in the PSU sector. And PSU banks have been eating into the market share of the likes of HDFC, Kotak, Axis, and ICICI. Where if you see the trends of auto loans, home loans, the PSU banks have been taking over them, and that has also been witnessed in the share price as well. Like the Canaras of the world, the Indian banks, and SBI have far and largely outperformed ICICI, Kotak, and HDFC Bank.
And is there a story like people would be questioning like why this bank is underperforming so much? Like just want to share it here. Like that's the on return we are talking about. If you see the blue curve here is SBI, which has delivered 135% return in last 5 years. ICICI Bank has given 110% return in last 5 years, and for the same period, HDFC Bank delivered 4% return. That's the return which option trader claims they make in 1 hour probably, right? And HDFC Bank took 5 years to deliver such sort of return. So, but there must be something going on, right? What was the important thing which happened during the period which caused this? What do you think?
So I think one could be the HDFC Limited and HDFC Bank merger, which was completed in 2023. I think it was the 1st of July, and was advertised and admired like, it's a transformational merger and never done before to have one huge bank and one company in charge of both the segments. And arguably you could say that it has been one of the worst big mergers that has happened recently in terms of share price performance. And it was being said that it has been done to save HDFC Limited and to mask its underperformance by the improved performance of HDFC Bank.
So at the moment, seems like they also killed the HDFC Bank with this thing.
Exactly.
Because everybody now owns that HDFC Limited. But there were some commentaries also, like I think somewhere close to, I think on 18th March, the HDFC Bank chairman, Atanu Chakravarti, resigned. And he said there is something which is happening for 2 years, which does not align with his values and ethics. Now, he didn't say what's happening inside the bank, but he did mention that there are some practices which are happening, which conflicts with his value and ethics. But we don't really know what's cooking inside. So that's the story as of now.
And again, everyone owns HDFC Bank through index funds because it has the highest weightage in the indices of India. Like if you see the major indices, Sensex, Nifty, Bank Nifty, the major weightage is in HDFC Bank anyway. So most people have exposure directly or indirectly to this underperformance of HDFC Bank. So we all are stakeholders in a way to this.
Yeah, and do you remember there used to be a joke that if you got FD, you need to break it and just invest in HDFC Bank, you will not regret. And at the moment, people who made this decision, I believe, and if somebody parents, right, they were just sitting on boring FDs. I think in last 5 years, they must have made somewhere close to 40% return in fixed deposit itself. While HDFC Bank again made 4% return. That's not annually, that's the total. So if you invested 1 lakh rupee in the stock 5 years ago, at the moment it's massive 1,04,000. That's just 4% absolute return in 5 years. That's the case.
That's the power of stock market.
But on a serious note, sometimes people need to really look at the factor. Like I think there is a thing called P ratio, but I think in banking industry, it usually the book multiple, PB ratio probably. And as we are talking about, I think the price to book multiple for HDFC Bank is, just allow me a second, I will get the data.
Like historically, PSUs were valued cheaply because like the private banks had the premium due to governance and other factors, but that again has been converging because of the kind of credit growth that the private sector banks have been showing.
I think at the moment it's lesser than ICICI Bank. The price to book multiple we are talking about. I think it was what, 1.89 probably,
Yes.
and for SBI it was 1.59, and for ICICI Bank it's more than 2. And one more thing I want to tell everyone, as Dhanesh said, almost everybody owns this bank, and I want to tell you how people own this bank. So in March 2017, the number of shareholders for HDFC Bank were close to 4,63,000. Then in March 2022, it went up 5x and 21,51,000, close to this number. And at the moment, the number of shareholders are 45,32,000. Now, how many active investor we have in Indian markets? Is
You
there
can
some
just check
number?
the shareholders list of Yes Bank. You will come to know.
Yeah, we will probably get a closer number to how many people are active, because Yes Bank is favorite value stock for everyone. So
And I think, funnily enough, it has outperformed HDFC Bank. I'm not sure, but it's quite possible.
very much possible. I think it went till 4 rupee or something. So yeah, so we have somewhere close to 13 crore investors in India, and 45 lakh people own this stock directly. And so many people own this stock via mutual fund, because look, there are so many mutual funds which want to play safe. And when you want to play safe, your job is not to uh, outperform, I would say, indices by a huge margin, because when you try to do this, you need to do something which is different from indices, right? And when you want to play safe, you don't want to do something very much different than indices. So a lot of fund managers just replicate indices with bit of changes and all. So almost every fund in India would be owning this HDFC Bank.
Right.
And index fund investors are anyways bleeding. If you see, honestly, that's one of the reasons why Nifty is not trading at all-time highs at the moment, because these giants, TCS, Infosys, HDFC Bank, these guys got somewhere close to 20% weight. And I haven't even added Reliance weightage at the moment. So if these guys will not perform, how will you actually take indices to new highs? And these kind of transition happens in indices. Like, if I can recall well, the peak of Nifty in 2008 was close to 6,200 or something, around 6,000 level. Then the bottom was close to 2,700. And then it took 6 odd years to cross those levels, I would say, in a promising manner. Like, market was just
Right.
consolidating for 6 years. The word market here I mention is by Nifty here. And I think in 2008, ONGC used to be one of the largest company probably during these phase. And then, that transition happened. ONGC started underperforming. Some other companies will get more weightage, right? And this is what is happening with IT at the moment. And that's why probably small cap, mid cap, or stocks beyond these mega caps, giant caps, or elephants are still doing fine. Not that worse, which we usually see on our Nifty levels. It's not
Right.
that bad, I would say, in other market cap stocks, or So that's one of the things which happened in 2008 to 2013. I think pharma exposure used to be really low in Nifty. Probably Sun Pharma also became one
Sun
of the
Pharma,
company.
yes.
Yeah, I think his founder became richest in India for a while, I think, if I can recall well. So that pharma weightage was probably increasing in that index. And at the moment, this is happening here in Nifty case. These elephants are just moving very slow. People, paid more price to book multiple because they assume this elephant will keep on running hard, but elephants are not known to, not known for their running. They are known for their stability. So you may
Right.
see this stability for 5 years. If you're fine, I mean, with low volatility stocks, you should carry on holding this stock.
Agreed. Agreed. And I think involuntarily we are anyway owning it. So hopefully the issues get cleared, because whenever there's governance issues, usually the stock never does well. So hopefully it gets solved.
Right. I mean,
And this was always the risk, right? When you join two giants together, too big to handle.
And one more thing, like these multiples are what? It's just bet on growth, right? That things gonna grow. And when you have deposit of 30 lakh crore, I mean that could be one of the reason why people don't allocate such multiple to SBI. SBI got 60 lakh crore worth of deposit. Doubling it from here on, I mean the growth will anyways be slower because it's like that student, if a student score 95%, the scope of improvement is really low from here on. The reason is every 2% will demand a lot of extra effort, I would say. While there is a student who scored 50% in exam, and you can actually bet that this guy will be on a growth perspective. This guy will be, I would say, growing at a faster pace because that 50%
the
to
base
70,
effect.
yeah, 50% to 70% is easily doable. It's like even in fitness, right? Like when you got abs or those kind of things, you are already, I would say, at 13%, 12% body fat. And if you want to go to single digit, now it cannot be just, taking protein or, being calorie. It requires a bit more, just not normal things. While if you are at 20% body fat, it's pretty easy to drop. If you are obese, it's easy to drop. I mean, we see those stories, right? 100 kg to 90 kg. That's easier in comparison to what top level athlete go actually. So that could be the case here also.
Yeah, agreed.
All right.
So now coming to, like we were discussing, management and other stuff of these huge banks, right? MNCs like HDFC Bank. Let's talk about something about people who are in charge of running such large institutions. They are
Mhm.
mostly, right, famously known as the MBAs of the world, like the CEOs and CFOs and other executive directors all come from these prestige universities and institutions across the world by doing the MBA programs. So, Sumit, have you done an MBA?
No, no, I'm just a BTech holder, and that was my highest level of degree. For a second, I thought you gonna invite CEO of HDFC Bank to explain all this.
So, we can basically give a masterclass to the future CEOs of probably HDFC Bank or their own startup, and hopefully we'll be adding some value to them, and we'll be clearing doubts as well. Where we'll have a special guest after our introduction, where we will be talking about the costly affair, which is education. Right? We spoke about in a previous episodes about how education has become a huge business. Right? Everyone knows that school fees from grade 1 to 12 have skyrocketed, and it doesn't even end with 12th grade, right? You have your undergrad, then everyone says now that you have done your undergrad, do your post graduation. And the consensus is that it has been a glorified placement cell, right? Everyone wants to get the best job in the world, and their aim is to get into the best colleges first, and then via that college get placed. So we'll be debunking a lot of myths on that, and it's not cheap is all I'll say.
Yeah. In fact, you just talked about degrees. We missed one cost. I think in previous episode we discussed the school fees and all, but we are not talking about like when you want to go to top schools in anything, whether it could be for engineering it's IITs, NITs, for medical it's AIMS and NEET exam and all. For these like the competition level in India for these top colleges is really high. So we also need to add the cost of that exam preparation actually, which we
Right.
pay fee to institutes and all. And I think it's true for even I would say after graduation also when people do post graduation program. I think in medical exam like for 5 years you do MBBS and then I think those guys get MD probably, and for that also they need to prepare for all India kind of exam. Then you are allocated, whether you're gonna be doing cardiology or a bunch of other things, right? So again you have to pay money. So and that could be true in case of MBA also. I believe it's CAT exam, right?
It's not, so, but it's not that expensive. But the real cost behind the MBA is usually the opportunity cost, right? Because you are usually doing your MBA in your mid 20s, like in the range of, in India especially, it's like 22 to 25, 26, 27 at most. And when you go abroad to US or something for an MBA into the Harvards and Whartons of the world, it is usually post 26. So you're also losing out on earning for that particular year or 2 years, right? Along with the course fees, like you can see, on an average in India is around 25 lakhs for the program. For some it's 1 year, for some it's 2 years. So that's quite
Right.
costly for the general public, right? We come from privilege, but otherwise it is not that affordable for most people.
So I believe we don't really have a lot of knowledge around it. We should invite our guests to break this down for us.
So we have our guest today. He has done his MBA.
Hi guys, how are you guys doing?
Hi, Aryan.
Hi.
Yeah,
Hi, Aryan.
Danish.
Yeah, I hope I'm
Danish, yeah,
audible.
you.
Yeah,
Yes.
yeah,
How are
perfect.
you?
Doing well, man. Thanks for having me.
So would you like to give an introduction to our audience first?
Sure, I thought you were gonna give my introduction since you asked, but yeah, I work in VC, as you probably put that in my poster, right? Doing consumer and B2B investments. Before that, as you guys already mentioned, did do my MBA from ISP. By the way, your chart says 39 lakhs. It's a bit over that. It's a bit more costly. I was looking at it and I was like, I wish it was 39, but it was a little more than that. So that adds the loan amount, etc. And before that, also worked in a banking class V firm. And before that, I worked on startup in wealth. That's how we know each other. So yeah,
Right. So we just wanted to debunk a lot of questions like, what is the reality check
yeah,
behind MBA? Because around the net, there's a lot of noise, right? We have Nikhil Kamath saying, it's a dead investment when you're in your mid 20s, but you still ended up doing it, right? Even after having a stable
yeah.
job, I would say, in a very good firm, as well as a good undergraduation background and a CFA charter holder. So I would like to know, like, what is the key factor for doing the MBA, as well as pre and post MBA, what changed?
Right. So I had, in fact, written about this before, and I planned on writing about this a little later as well because I keep getting these queries. So this was a good forum to address it. See, my reasons for doing an MBA is something that was extremely personal, right? I was in this job, and while I enjoyed it, I realized that at least my industry, the pedigree did matter a bit. Number one. Number two, while I like my undergrad, and it is recognized at least in Bombay, it does not really have as strong alum relations as, let's say, a top tier undergrad, let's say an SRCC, BITS, IIT, etc. So for me, the rationale was one, get that tag because that does open up doors, and as a post MBA, it does help, right? There's still a lot of industries, etc., that value it. There is an alum network that opens up, and that gives you a lot of opportunities in terms of info flow, etc. Other than that, it's just that it's a good insurance policy still in this state and age. Uh, Other than that, I got a year of vacation, man. Like I think the most underrated experience, and I think this is more ISB because I've seen this a lot more mentioned whenever I talk to ISB alums versus other MB alums, is that ISB instills this sense of self confidence in you, right? The day you enter it, from that day till the end, right? There's a lot of emphasis on making sure that you become an independent thinker, right? There are no books, etc. in ISB. Case studies hote hain, but it's usually like you learn from each other because a lot of people come from experience, right? So I had like a person from army, I had a person from who had a dentist background, etc. So you make really good friends of all ages. The average age of ISB for an MBA is a little higher. So you learn a lot, but more than that, it instills this confidence in you, which is hard to come back. And what I've seen is, at least in India, when you're growing up, a lot of people are like, you don't know what you're saying, right? Don't trust your judgment. We know what's better for you,
Right.
right? That is not the case in ISB, at least, right? I don't know. I can't comment about other MBAs because I've not been to them. So that itself was worth the 50 odd lakhs, by the way, which is the fees for ISB, which not everybody pays, by the way. 25% of the class does have scholarships, which could make it as cheap as 4 lakhs. And a lot of people have gotten those over time. So for me, it was a way for me to get a vacation down, help you get that. In a lot of rooms, certain times MBAs are preferred, right? It becomes like a game theory aspect where you're applying for a job and you might qualify, but in certain cases, the other person is equally qualified. Like I know this degree versus skills debate has gone for ages. My only argument to that is what's stopping somebody from a degree to getting those skills, right? There's nothing stopping them. Degree alone doesn't have value. I would agree with that. You do need skills, you do need support, but I would not call it absolutely useless for all of these softer factors that come in.
Right. But my question would be like, if it had to help in one spot, you would say is putting you in the right room, right? You had said that way.
I would say more than that, giving you the confidence that you can enter the room, right? You stop, like, the mentality shift becomes that, hey, you know what, I need permission to enter this room, to, hey, you know what, I deserve to be in this room. How can I get into that? And what's
Right.
stopping me, right? Because now there's no reason for somebody to sort of disbar you from the club. It's like that, right? But you might have the self doubt, oh, you know what, this is only for MBA, so this is only for people with a post grad, or this is only for people, who have this XYZ factor. But now you at least have that confidence, which also is a criticism, because a lot of times people have been told that this MBA comes with this arrogance and they just burst into a room. And that's the other side of doing an MBA, which a lot of
Yeah.
people end up. So I'm not saying that criticism is not valid. But in other sense, it does help you on a personal level, because you no longer, you have that thing, hey, you know what, I want to be in this room, how can I get into this room? I think that mentality shift is what I'm talking about, is the major takeaway.
But I think in your case, because you were self-aware that you wanted it to be a vacation, as well as in your current career, you required this particular degree, for example. But for someone who is not clear yet, what would you suggest them? Like, is the 50 lakh going to be worth it for them? Because if they are feeling in a way lost in the mid 20s.
See, I think I would say in that scenario, it really depends if you can afford it. So, like, my matrix for evaluating an MBA is on three parameters. One, the first one I always tell people is, can they afford an MBA, right? Especially in today's day and age, just going to an MBA is not going to land you a job that you might want also, right? Each college has few jobs that come there, and they're good for that. Like ISB is great for consulting, right? Like a lot of people get consulting roles after ISB. It has one of the highest placed consultants to the batch ratio among these guys, right? Like, and the day you enter, you get a playbook. So as long as you follow it, you put in the effort. A lot of my friends have got into consulting. A lot of smart folks, so you can get into consulting that way, right? Similarly, every other MBA college will boost one or two top recruiters, and that's the pathway that you can get into that,
Right.
right? Certain roles like require an MBA, so you can get those. But monetarily, it's expensive, right? Because you have an opportunity cost plus this cost, and not everybody gets a scholarship, right? I would put my opportunity cost almost like three-fourth of a crore at least, right? If I
Right.
really think about it. So when I think of it that way, yes, it may not make sense, right? And the way to look at it is how your career would look without an MBA versus with an MBA. But what typically matters is, can you afford it, right? It's fair to understand that if you can't, right? That's the first thing. If you cannot, if you have to think about the money, you have to think about, oh, my loan, if I take a loan, and how will I repay it? If I, let's say, don't get a job for 6 months, how will I repay it? If that is part of your consideration set, typically don't do an MBA, because it's not going to help you that much, right? Certain cases, if you like, let's say, want to do banking, consulting, if you want to do those jobs, yes. But today you can make money with startups, right? You can join a startup. There's very little pedigree heavy kind of an entry route in startups, right? So you can get in there. That's fine, right? Second is, if you already have a great undergrad, if you have let's say an IIT Bombay, IIT Delhi, SRCC, one of those top TU colleges, right? If you're in the top 10 in the country in terms of undergrad, you already have a strong alum base, and MBA may not be the best thing for you either, because it adds to the cost. The alum network of an MBA, what I've seen is the undergrad is a little stronger than an MBA usually, right?
Okay.
Like an IIT Bombay alum network or a BITS Pilani undergrad network would beat an ISB alum network, because they are more diversified and they're a larger alum base. nothing else. And they have been around for longer.
Right.
ISB has been around for 2001, so about 25 years. I'm the 25th batch. IITs have been around for a little longer than that. So there's obviously that part, right? They have a bigger alum base. So and as a result, more diversified, because MBA folks go into generalist roles, etc., etc. You have lesser techie roles. There you'll have startup founders, etc. And a lot of times they're the same folks as well, right? So if you already have a tier one undergrad, sometimes it makes sense, sometimes it doesn't, right? So there again, I'll put in what you want to do. Like, let's say you have done a solid undergrad, but your degree or whatever your job is techie, and your next step requires you to do an MBA. You want to make a functional change, then yeah, sure, it makes a difference. But if a pure play reason is MBA, okay, I'll just get a better alum network, that may be true, but you can still get that network, I would say, right? And the third bit I sort of ask people is, what do you want to get out of the MBA? Do you have that clarity in life at this point, right? Do you want to do consulting? Do you even want to do MBA, post MBA roles that come, right? And if you're happy with your role, if your comp is already, let's say, about 25 lakhs, then an MBA may not make sense, because the average salary post an MBA is like 30, 35. So if you're already a little older, if you already are making, let's say, 20, 25 lakhs in a growing industry, already in a good job, leaving that, going for an MBA, I know folks who were making 50 lakhs before ISB and are making lesser post ISB. They had a functional
Okay.
change, but people have done that, right? However, the reason for that was they were already at a manager position there, and their career had plateaued. So it's a fair
Understood.
thing,
Yeah.
right? It was like, they were like, maybe, let's say, late 20s, they have done very well in their career, they have reached a certain point, but they cannot grow further. So they came to an ISP, their agenda was different, which is why I say,
For
like,
a
pay is not the only thing, but
cross functional or a stream
cross-functional
shift in a
shift,
way.
etc., right? And in that scenario, it's great, because otherwise, either that's not possible or your pay cut would be far higher.
Right. Right.
One of the two, right? Matlab, like, agar aap product kar rahe the, like if you were a SDE, you were a software development engineer, and you want to move to, let's say, consulting, you no longer want to do tech for whatever reason, right? Consulting, of course, pays lesser than tech. The industry pays differently. There were people who wanted to go from finance to marketing. Marketing as a
Right.
field pays less than finance, right? So obviously, those scenarios happened. Or they went from a smaller company to big, major big company, which has better work life and other benefits, etc., where there's a ceiling that can go into all of that. So those things make a difference, and eventually, on the long horizon, in like 2 to 3 years, it evens out. So these three things make a difference, right? Unless even if one of them is like in question, I would rethink it, is the only thing I would say, right?
Fair.
And
Fair.
this is also true from my experience at ISP. It may not be true for every MBA. Like, if you go below the top 10, I don't think an MBA is worth it, personally, in
So
today's
below
age.
top 10 school, you mean?
Top 10 schools, yeah.
Okay.
So, like, what are the, I would say, how many people can study in top 10? Like, what would be the capacity? Like, in IIT, it's close to 12,000 for all IIT seats.
I
So,
would
in
say
that case,
on average, I think that 200 seats per MBA college. ISP is a little larger at 400 across both campuses. Some are at 300 as well. So let's take an average of 300. It's about 3,000 per
that's it.
year, I would say. Yeah, 3 to 4,000. But if you also think about it, post MBA jobs are also lesser. Like, if you see all these surveys that come out, white collar
Yeah.
jobs post MBA, the ones
Right.
that pay you about 30 lakhs, how many job creation is there at that level also, right? So
Fair.
also look at it from a supply and demand POV. The reason I say top 10 and not say a top 15 or a top 20 or why not top 5 is, on average, how many white collar jobs are being created every year, right? If you see, once you drop down from the top 10, the job offers also start reducing. The placement count starts going down, right? You see these surveys where they have been asked students to drop out of the placements so that they can show 100% placement, etc. That happens in a lot of colleges. So when those kind of things happen, you realize that there's not enough demand for these students, right? Now, are these students not smart? No, not really. I don't believe that. I believe they're smart. The point is, there are not enough jobs, and it's a demand and supply curve, right? If I'm paying top dollar, I want top talent. If I cannot get top talent, I'll go to the next school, the next school, the next school. And that's the reality of it, right? I don't see much of a difference between the top 10 MBA colleges talent as much. There is a slight difference. Individualistically, there would be. Range wise, normal curve follow hota hai. Everybody would lie somewhere in between that, broadly. And it's a function of what they want to do, what they want to sort of make, what stage of the career in. Like, if somebody does not have
Right.
2 years of experience, they would not come to an ISB, right? Because they can't. Because that's the minimum work X. They'll go to an IIM Ahmedabad. Does that mean that? Or they might even go to an IIM Calcutta for that matter, right? So I would not say top 10 में उतना difference है in talent density either. Top 5 में तो बिल्कुल नहीं है. Top 5 is broadly the same in my opinion.
But yeah, I think I've also spoken to quite a few people who hire, like they say, we go to these institutions because they make our life easier for them. Like if they put out
Yeah.
a job application, they'll get like probably 1 lakh applications. If I give a VC analyst role today, you'll get like I think what 10,000 applications in a day.
Yeah.
So for them, it's like, we are giving our headache to the institutions. They will clear a filter where we will get the cream crowd. So it works beneficially for even the other party, right? Here.
Yeah.
Because you will be getting the top, I think, what, 1% or 0.1% of students?
Yeah. Yeah. And also, even within those campuses, there are strict processes, right? I mean, see, two things happen, right? One, because you have this thing where you cannot reject jobs. Like ISB has this one offer reject policy, at least at my time, where if you get the first offer, if you get two offers, you can choose which one you want to go to, right? And you can always reject the first offer and still be on the placement portal, which is nicer than at least my undergrad, where you have to, the job you get is the one you take. But what I mean by that is because, there's limitations in every step. You can apply to as many companies, but once you get shortlisted, you can only get shortlisted for 5. So there's that pattern that they follow to ensure that you're not applying randomly to every company. So even between these students, it's like, it's not a LinkedIn easy apply that everybody goes and applies. There is a set process and they have sort of marked it, right? And the good part is now, at least in other colleges, there's a student-run placecom. ISB does not have that. ISB has a campus-run placecom. So like there's no student in the placecom body, which means that there's no bias that gets involved at any stage of the process. So there's no, like Reddit is full of these placecom stories. ISB does not have that. So that was a good part. So that way, when a student is coming through that pipeline, right? They at least want this job and they're sort of prepared for it. And because the student has a lot more to lose than somebody already in a job, they have probably worked a little harder at that point of time, right? I think we have all put in more effort in getting our first job than our second job, right? So it's like, that helps.
So you've been saying, right? Alumni is very important. Like that's the reason people go. So what is that one thing about networking like people are getting wrong? Like you're saying, right? People go for the networking and alumni.
Yeah. I think people forget that just because you're from the same school doesn't mean I wouldn't want to talk to you. I mean, being very honest, right? It's like saying, oh, bro, you're from Bombay, I'm from Bombay, let's talk. It's a good conversation starter, but it's not a conversation retainer, right? I mean, see, a common link, I can find a common link between, like, Dhanesh, you and I are both Sindhis. That's a common link, right? We can talk about that. But does that mean that if I come to you for a job, would you give me a job? Not really. Right? It would be like, okay, cool, but what else? Networking, in my opinion, fundamentally is a value exchange, right? Somebody's willing to take a bet on you because they see some value in you, either that you're bringing in something from a POV that future mein potential hai, right? Or that, you seem like a hard worker. I see something in you which maybe remind me of me, or that you're working somewhere which can help me and it's a quid pro quo situation, right? That's how networking usually works. Right? One of it's friendships where you bond over, let's say, cricket or whatever you want to call it. So one thing fundamentally people get wrong about networking is, one, just knowing somebody is not a network, right? Like if you remember last year when we were talking about 6 months ago when, we spoke on the phone and I was asking you something related to, what's happening in the PE space, etc. Now I could do that because we have formed a relationship over 2 to 3 years, right? We have known each other since, I don't know, 23 or whatever. So that's not really... That's what I call a network, where I can call you at, let's say, 2 a.m. at night and, you'll still pick up my phone. If I ask you for a favor, you'll do it because you know that next time when you want me to give you a favor, I'll be able to, one, be in the position and willing to help you out. That's network. Versus somebody knowing somebody, that's not a network. So one thing, just knowing somebody is not a network. And two, it happens when you also have something to give. And you need to create that. Otherwise, you're wasting your time. Build a skill first.
Yeah, like you can't say, like, if example Ashneer Grover is from your college, he's not going to help you out to get a job over here in his company.
He might. You can reach out to him. You can reach
Yeah.
out to him, right? It allows
So
you
it
to
would be a
reach out to him.
starter.
That's the
The
benefit.
school
But
school
you
would
need
have
to
been the
stand up.
starter topic.
Yeah, it can be a starter topic, but you still need to impress him, right?
Right.
It can't be that, hey, I'm from the same college, give me a job. It will be, hey, you know what, I'm from the same college and I followed your journey and I see that you have this role open at SD. This is how I think, I can improve value in your company. And these are my 5 things. That might give you an opportunity to at least talk to him, and then you have to keep on impressing him in this scenario,
Hmm.
right? So that's what I mean. Like, it's a starting point, but you still need to sort of move your case and you need to still build your case, which a lot of people
It's
ignore.
more like an entry ticket, and what you
Yeah, it's
do
an entry ticket.
is totally up to you from there on.
Yeah, yeah.
All right. All right. Just a very beginner question for MBA. I mean, MBA aspirants actually. Like you mentioned, it's more about top 10 schools, which adds, which has the ability to add more value in comparison to what gets sold post these rankings in colleges. Like, what is the entry criteria for, suppose, I believe most of those colleges will be IM, and there could be some private colleges in these top 10. So
Yeah.
how does one get into these colleges? Like, how does the entire flow looks like?
Right. So, to be honest, I wouldn't be as informed over the other colleges, right? Because I never gave CAT.
Okay.
For me, as I said, right, my MBA decision came in much later in my life. I was already at 3 years of work at 3.5 years. So I wanted to only apply to ISP, or I could apply to foreign B schools after a year because they require slightly higher work ex at times.
Right.
So I gave only GMAT in this case, which is what is required in ISP for the PGP 1 year flagship program. So there, the average was 665 in the focused edition, which is your 98 percentile, I believe. So there are people who get a higher percentile. There are people who get lower percentile as well. This is an average, right? Then what, at least ISB's process, what they care about is तुमने क्या उखाड़ा है life में? Like, what have you done in your life, which is different, right? And then why do you even want to do an MBA? Like, ISB really drills down on that question quite a bit. So ISB's interviews do not really have those puzzles or random case studies, etc. They are mostly focused on you as a person, and they're trying to verify whether one you'd be. It's more similar to a job interview in a lot of ways, but it's a very chill conversational interview, right? It's like, and they align the panel with your experience. So because I had started something, I used to cover fintech before. So my panel was literally a founder building in consumer and a professional who has worked in fintech and somebody from logistics, because that's how the panel was set. And the entire conversation was, there was 10-20 minutes of talks on fintech, my opinions, my views, why do I want to do MBA. They asked me a question like, you had XYZ experience, why do you want to do this? So a lot of those questions in and around our basis here, why do you want to even do an MBA? Why do you want to come to ISB, right? You need to have thought about that answer. And as I said, right, this also helps because, coming back to my initial framework, if you don't have this, right, they're also seeing that can ISB provide value for you. It's a two-way street, right? If you're paying 50 lakhs, I don't want you to come out of it disappointed. So again, like, if you're like one of those people who's already earning well, you're already in a job, you know it won't add value. So they'll ask those questions to see if they are missing something. It's more of an understanding that goes in both ways. So what they're pretty much looking for is, why do you want to join and what value do you bring? Those are the major questions ISB cares about. And they assume that you're smart enough because you've crossed the GMAT barrier. So they're not going to ask you any of those other questions. They're not going to ask you any GK. Or at least in my case.
Which is fair.
It's fair.
And I think for them also it's right? Because technically y'all are the products for the school to sell later on.
Yeah, exactly.
You're the school's product, and it's a business at the end of the day. We need the cream crowd, the best products coming out.
Yeah, I mean, MBA by itself is a business of gathering smart people, bringing them together, make them party for a year, and then leave them out in the wild. That's what an MBA is, and take money for it.
But right. I think you have debunked one thing, that we have the word MBA has business in it. Do they teach you business or?
Yeah, that's a fun question. I think they teach you business by selling you the product of an MBA, in my opinion. But that being aside, no, see, the thing is, what I have noticed is, did I learn how to do a business during my MBA? Not really. And that is not what they teach. What throughout the year, what I understood was, one, you learn the basics of the first 2-3 terms, you learn the basics of everything else, right? So now, for somebody who has worked in finance, or if you have started a business, or if you have worked in a founder's office role, the first 2-3 months they're going to be like, okay, this I know, right?
Hmm.
But
Yeah.
you'll learn a formalized way of approaching things. That's one. And the other would be that you'll get a different perspective on the same thing, because there'll be a discussion about everything. So like I still remember this one class where we, there was this one case study and everybody answers pretty much the same thing. But there was this one friend of mine who came from a startup background and he was like, "No, this won't work and they should experiment again." And everybody sort of laughed. He was like, "Why would you experiment again if it has not worked?" But the right answer was experimenting again, because X factor was not noticed and he had that knowledge because of his previous work X. So those kind of things where you learn from each other, right? Because it's basically what, 70 people in a class who have done something, right? They've crossed a barrier to be there.
Yes.
Now, not everybody's of the same level, right? Somebody has more experience, somebody's a little smarter. There is, of course, a curve there, but you learn, right? Everybody has a different perspective. It opens up your mind a bit more, which makes you, fortunately, a better leader going forward, because you acknowledge how diversity brings in. The second thing is undoes a lot of your biases, which you may not know, right? Because if people have different experiences, so those kind of factors help. Third, it helps you with frameworks. So although I'm not a big fan of frameworks and mental models personally, I believe that while those are helpful, you need to build your own rather than just borrow. But they do give you a starting point at times. And it's not that you apply them on a daily basis. What happens is 3 years down the line, 5 years down the line, or 1 year down the line, you encounter a problem and you realize, oh, this is a next version of the problem I've already covered, right?
Hmm.
You also learn different business models during the year. So if somebody has not, like, sure, I have read like 300 pitch decks before I went to ISB, but not everybody has that experience. They know their business model well, but they don't know other business models. And sometimes, let's say we're discussing a platform business, and the professor might say, "Oh, CAC is a problem in this business," right? But then somebody would come up with a thing that, "Oh, in my previous company, the CAC was reduced, and we made this model work by doing this," and that's not even covered in the case study, and it's not covered in the class. And then the professor will sort of build on that. And all the professors also work in ISB. They've done their research. You're pretty much getting the latest information that's out there academically, but also these
Nice.
guys work and talk to practitioners. So you're getting real-time insights from good folks. You also have a lot of guest speakers that come in. Like I learned how digital public infrastructure works from somebody who worked on Aadhaar directly as a senior leader. So
Oh,
you
nice.
that helps, right? I relearned PVC basics from somebody who has been in private equity for a long time, right? And he got these all great guys from, let's say, Chris Cap, Kedara, etc., to give a talk. So you learn from these real life practitioners, and then you can get to ask them questions. So that access that you get, the fact that you get to talk about your biases, etc., it helps with that. Does it teach you how to do a business? No. In fact, I think MBA is the most risk-averse degree, and MBA is the most risk-seeking behavior that you can think about. So it doesn't really align that way. That being said, one good part about ISB is that if you want to build something, they give you an option that you submit your idea, and if it passes the initial checks and pitches, ISB funds you with a certain amount of money and
Okay.
tells you that you build it for a year. And let's say it doesn't work out in a year at all, you can sit for placements after that with the next batch. So it gives you that
Nice.
baseline. And since your MBA loan has a 1 year moratorium period, anyways, you technically can do your MBA, build during your MBA, build in the next year. You get 1.5 years to build, which is like good enough time. You get like, I don't know, 25 or 50 lakhs to build it as well.
That's like
And
free
10
hit.
people get this per batch. Yeah. And then you can go and get the placement done later. So that helps a
Yeah,
lot.
that's a good full toss to hit out of the park.
Yeah.
Yeah, full toss and on a free hit actually.
Yeah. And I have friends who have done that. So in fact, one of the people in my section dropped out, like not dropped out, but they literally took that opportunity and are building something of their own.
That's superb. I think
That was something new
in
for
my
us, honestly.
yeah. That would be
That was
like
new for
the
me
ideal
as
case
well.
for our mind, right? कि MBA मतलब
Yeah.
business सिखाएंगे, and this
Uh,
is the opportunity that if some people, if they want, instead of the placements, this is very good.
Yeah, and there are people who are building anyways. Like I know a couple of people who were still working on their family businesses or still working on their startups, etc. See, whether you admit it or not, when you have your entry fee as high, which is like 50 lakhs, but basically the khacha, like it's like 44 lakhs plus your expenses monthly, etc. You are pre-selecting a crowd that can afford it, and if you pre-select
Right.
that crowd, there are going to be folks who have at least the privilege to take these risks. So a lot of them were actually building it without this program as well. And in fact, I know like 2-3 people who are not part of this program but are still building their startups post ISP. And a couple of them have, sort of like are building their idea out right now and will build something in the next 1 year or so. So you'll see a lot of them. So yeah, that happens.
I got one question actually. We were talking about loan, right? Like
Yeah.
I believe for home loan, we get what, 90% of the entire property value, right? Is it
Yeah.
100% in case of education loan?
Yeah, and you also get a very big discount on the rate. So so education loan, if you are in the decent credit score category, you get it for 6.75% in the case of ISP at this point of time. So it's a
Okay.
variable rate. It's given by SBI. So SBI has a scholar loan scheme. So basically, they have graded institutions, and ISP comes on the top, alongside a lot of the top 10 IIMs and your IITs, etc. Not foreign colleges. They come in a different list. So these 10, 20 universities in this group, they get a interest minus this thing, not a plus. So if you know how loans work, right? You guys know how loans work. It's like X rate plus 1% plus 200 bips, etc. Here it's minus. So they give you a discount. The reason they do that is their thesis is if we acquire this customer via loan, then make a bank account. And because the salary will eventually hit it, we also got a free credit card, by the way, from SBI. So like you get, like most companies, most banks run a program where they give you a very good loan rate and they give you a very good credit card to capture you as a customer. For them, it's a CAC, right? And the rate is lower than your home loan only in the case of these institutions, and you get it for 100% of the tuition fee. Plus, you get 1 or 2 lakhs depending on your bank for your kharcha, for your expenses, miscellaneous. And if you go for a foreign exchange, they'll cover that also. But the maximum limit is 50 lakhs for those loans.
Okay, so it's like those ratings which company got, So it's like education loan. There is a standard rate. Let's assume 8%. Like if you are coming from a good college, so they will reduce it for you, right? So it will be like double A rating or triple A rating, whatever, right?
Yeah. So exactly, that's how you think about it.
Yeah, and if you are coming from a college where bank thinks there will be a chance of getting probably lower placement or this guy may end up unemployed, right? So they will be pitching a higher interest rate in that case.
Yeah. Also, there's typical standard education loan rates as well, which are more closer to 11 to 14% because they're similar to unsecured personal loans. So your typical education loan can be a little higher, but your scholar loans in specific, this is a specific loan type under education loans, which is under SBI in particular in this case. But most banks offer a variant of the same.
Okay. So that was also something new for us. One more thing, let's assume I was going through the number. The average placement was, average salary was 37 lakhs. So is this 37 lakh component is similar to how these tech companies offer? Like most of those things are stocks actually. Is the distribution similar in these kind of offers or, and one more additional question to this, let's assume somebody's coming and he took, I would say he's not on scholarship. He paid the entire fee, let's assume 50 lakh in this case. How many years does it usually takes for an average guy? Let's assume he got this average placement to pay off his loan, like in that case.
So, the average salary reported is, of course, the CTC, and that would depend. But broadly, this is the CTC of a consulting company because that's at least for in ISP's case, that's the most of the offers that come in, right? Which is usually a fixed plus variable component. But it differs from company to company, right? The good part is we get very good disclosures on what is going to be variable, what is going to be fixed, etc. So we're not surprised by it, and we know this before applying. And in ISP, you can also negotiate your pay with the company, by the way. So like even if you get an offer, I don't need to accept it. I can always tell them, no, I want a higher salary because of XYZ reasons. Give me a higher position as well. So a lot of people have done that and have gotten, like when they get like 2-3 offers, because they might have shortlisted over 3. They got 3 offers. They've not accepted any yet. So they can go back and tell them, oh, you know what, I have offer from this consulting and this consulting company. Give me more money. So that does happen. Of course, it depends. Sometimes you're like, no, I'm not changing. This is a figure. You want to accept it, you accept it. That's like a lot of this case. But yeah. But the point being, when you look at something like this figure, it's close to what the CTC would be, and it's per annum. Now, I don't know how much of that is fixed or whatever, because I've not seen the stats. But it's fairly accurate, at least in my case, because I know how they calculate at least the survey, etc. It's fairly accurate, I would say. But Other than that, also it ties up with whatever I know about how much my friends are earning
Yeah.
broadly. So I would say it's up there, plus minus 20% deviation, like chalo, in my opinion. And fixed would be also the typical whatever you apply, right? How long it takes back to loan? Yeah, the thing is, as I said, that the loan ka interest rate is very low, right? It's like nothing. Like I make more money by putting my money in FT than I would by repaying the loan, right? Like it's almost
Right,
the
right.
same rate as an FT. So I have no hurry of paying it back. So in that case, 15 years is the max tenure. So the loan comes to about 45,000 a month EMI, right? If you're making, let's say, the average salary of 37 lakhs, I would put your in hand somewhere around 2.2, given the normal, what, 1.8 to 2.2, depending on your salary structure. So you would be spending about one third of your salary paying it back. So there's no chance that you'll prepay it, I'm assuming. Which is why I said, right, like if you're already earning like 25-ish, right, it may not make sense because the EMI component eats up your salary increase in certain cases. But if you're earning less enough, then in case it will go. But then if you're earning more, your post-MBA salary can also be higher because the average rate of increase is about 140% at ISB, like pre-MBA to post-MBA. Sometimes you'll make multiples on that as well. So broadly, I would say I've seen people pay back it as early as 2-3 years because they have some liquidation event, they do a good, like somebody joins, let's say, a banking firm and they're making a CTC of 70 lakhs or once a year, they'll pay back in 2 years after completing
Right.
their stint. One bonus, like Tanesh, you know this, banking, you make one bonus and you're done.
Yeah.
In the other case, some people choose to take a longer time to repay it because there's no immediate need for cash flow, right? And there's no prepayment of this loan, etc. So there's literally no reason for you to pay it back early.
Yeah, and like even if I got a huge bonus, I wouldn't want to pay it back, right? It's
Yeah,
sub 7% interest rate.
yeah,
Yeah, as he
and
said,
it's
like
always going
for
to be
in
that.
his case, it's 6% odd, right?
Yeah. So, yeah, but I think you would be net worth positive in like 3 to 5 years. This is a big amount. So it depends on your savings rate. But like personally, I think 3 to 5 years and you should be able to at least repay it anytime you want. Like you'll have that much savings in 3 to 5 years,
Yeah.
assuming you're not a squanderer with your money.
Yeah, like you have the optionality anytime to square it off in within 5 years.
Yeah, within 5 years, if you're a decent person with your money, like if you're still living paycheck to paycheck, then yeah. But yeah,
I
you can
mean,
pay it off in five
must be
years.
teaching in MBA, right? How not to do that.
I mean, yeah, but then once you get like, see, you're joining a consulting firm, you get used to, like, most people are joining a consulting firm. I'm not, but like most people do
Right.
that. So you're used to that. Once you join, you're like, "Gadi leni hai." Right? You can be like me and you can keep on buying new stuff every single month. You'll buy a new phone, you'll buy this, you'll buy that because paise aa rahe hain, right? You've not had a paycheck for 12 months and then you have a paycheck, you'll spend it.
Right,
So
right,
you
right.
have to stop spending it after a point and you have to start repaying your loans and savings. So, see, it's like markets, right? It's a bad, high peak company mein aisa nahi dalna hota, but you still do, right? So the thing is, you may know, but putting it in practice is a completely different game.
Right.
Cool.
So I think we can take some questions from the comment section if anyone has. And
Yeah, we will
till
be
then,
taking it. You can post it.
yeah,
Yeah, go ahead. You were saying something.
I have a question actually. So you were a VC before MBA, right?
Yeah,
And now you're a VC post MBA.
yeah.
So you would be the perfect person to answer that. What does an analyst or associate at a VC actually do? I know you all say that you all invest money, but what is the actual work that you're doing now?
See, I think VC is fundamentally a sales job, right? Unlike what most people think. I'll tell you, like most people come to me and tell me that, oh, you must be a VC, so your job would be sitting. You'll have calls like this, but I'm not answering the questions. Usually, the founders answering questions, and you're asking, and then you're deciding. That doesn't happen. That does happen, but that's not the job.
Right.
See, the job is pretty much you would spend a lot of your time sourcing deals. What that means is you spend a lot of your time hunting down founders who are doing well with a certain background that you might be seeking. You might be talking to founders in a space that you're interested in, right? You'll be using your Alum network. You'll be pretty much talking to as many people as you can, right? Everything is deal source, as you call it, right? So it could be that, you go to an event because you can find people there. You'll talk to people who reach out to you cold as well. And a lot of the job is then figuring out, does this make sense? And as an analyst or an associate, your job is to sort of help your partner find the right deals, right? So
Yes.
whoever you're working with, you're gonna like you understand what they are looking for. They'll look at like 4 5 metrics that sort of are the filters that every VC firm has, and it differs from fund to fund. Some funds really like consultants, some funds really like operators, some funds really like 2x founders. Some funds do have a pedigree bias that only IIT, IIM. Some firms are okay with it. Every firm has a different viewpoint, right? And it comes from whatever they have seen. And that is why some funds will pass on you, but some funds won't. So you figure out what your fund philosophy is. You figure out what space you want to invest in. And every space has a view as well. And that can be shaped by previous investments. Let's say you invested in a sector and that hasn't worked out for you. The VC would be reluctant to invest in that sector, although the sector might be doing well, right? Or in other case, somebody might new come in and be like, oh, you have made mistakes in the sector, but I have a differentiated insight. Let me help you build a new thesis. And it might
Right.
change how you have evaluated a firm 2 months ago. So a lot of his job revolves around looking at the philosophy currently, one, challenging it as well, because you bring in a new perspective, reading a lot about the sector, bringing in a fresh perspective, because you are not bottled down with the baggage that the firm might have at times, right? So you bring in a new perspective, you question things, you're paid for your opinion subjectively. And a lot of people think that, oh, why would a 22, 25-year-old have an opinion that, let's say, somebody who's like 15 years, 20 years may not have? It's because you don't have the bias. That's what the idea is, right? You can
Interesting.
ask dumb questions, and sometimes those dumb questions reveal first principle thinking, as they call it, right? The basic fundamental key. Why do you feel so, right? Like, this is a heuristic I've worked with, but I want to challenge that heuristic. And that
Right.
heuristic might have also changed, like how you look at it in public markets, right? A strategy might have worked in the past, but it may no longer be working in delivering alpha because it gets evened out in quant, etc. Same logic, right? You might have a heuristic that had worked in the past, it may not be working in the future. Things change over time, right? A manufacturing play may not be sexy 5 years ago, but today, because of BIS norms, it becomes sexy because there's
Yeah.
tailwind, right? Something may not be possible pre-AI, but now with AI, you can personalize it, right? Something like what I was building, which was a well tech, it wasn't possible building it maybe 3 or 4 years ago because there was no personalization aspect because AI नहीं था वो time. ChatGPT launched later. Like, I was building in 22 early. It was launched a little later. And then the well tech up chal raha hai because now everybody's like, oh, well tech makes sense, right? So the idea is you will, one, question your firm's philosophy, you'll adapt it, you'll find companies that fit it, and then you sort of do an initial check, you do a lot of research. And early stage building is all about the founder in the market. So you're sort of validating if the market makes sense. You'll talk to folks who are working in that sector, you'll talk to the customers of those companies. You will do some desktop research, but desktop research is usually thin in these sectors. Because here, imagine this, if I'm making a Blinkit 4 years ago, 5 years ago, like when Zepto launched, there's no report on quick commerce, right? What will you read, right?
Right.
What you will do, and it's a new category, right? So there's not like you can go to somebody and be like, would you take it in 50 minutes? Like, sure, but they won't have an answer for that. So you kind of develop other things, right? Has it worked in, let's say, a US or a China, right? Why did it work there? And you try to pattern match. You try to pattern match if the founder has the right profile. So that is the job broadly, but a lot of it is having opinions, finding good deals, talking to a lot of people. It's very
I
social
think
heavy, and then once you have all of that, selling your capital to the founder. The founder should also accept your money. A good founder has a lot of options, right?
Right.
So you also have to build that relationship with them that, oh yeah, sure, I want Aryan on my cap table. Like I want Aryan's firm on the cap table. And that's only going to happen because of one, firm's reputation, what the firm can do for them, right? And also the relationship they have with the person. Both matter, right? You can't be in a very good fund. Okay, in some cases you can be, but in a majority of the cases, nobody wants to sort of partner or get an asshole of an investor on the cap table,
right.
right? So if the relationship is sour, then it's not going to happen. So you also have to be respectful to the founder. Hence, I say it's a sales job. You cannot be like,
You're a
whatever.
capital salesperson.
You're a capital salesperson.
So it's
And
basically you're saying
like,
that the analyst is getting a fresh perspective to the old energy that exists in the firm.
Yeah, you're getting a fresh perspective, not the old energy. I would not say put old energy. I would just say fresh perspective on things. Most VC fund partners are very fun and they're very young. Like, trust me, like
Right.
you won't. They're more up to date than a lot of young folks as well at times.
Interesting.
So, and what is the success rate of such investments? Like, and how do you define success rate?
Yeah, the thing is, there are two parts to this. One, VC ecosystem in India is pretty new. Like we are not that old as a system, right? And the feedback cycles here are long. So you only know when an investment has worked in 8 years or 10 years. Like what you're seeing right now, the IPOs that are happening are the first wave of successes, if you think about it,
Right. Yeah.
right? So there's not enough data for me to even actually validate. Like I can of course tell you, oh, this is the hit rate that's going on right now, which is 1 every 10 startups do well. But that is a number that is liable to change because there are companies that can still go bust. अब तक वो बनी नहीं है, right? It might be still be a Series C company that's still making on the pathway to profitability, but has not reached it yet, right? That being said, I would say a VC might be looking at, I don't know, 400, 500 companies a year, might be investing in one or two, and then in per year, and then they might have a portfolio like this is one person in the team, I would say. Totally, they might make like 10, 12 investments a year. In that, maybe 5, 6 will fail most likely. Of the 5, 6, 2, 3 might do decently well, and then 1, 2 will be hitting out of the park. Right? This is if they're good at what they do.
So it's
They're
the
bad at
Pareto
what they do, all of
principle.
them are right. Pareto principle, 80-20.
It's probably even a more of a steroid version of 80-20.
Yeah, it is. So there's something, there's a book called Power Law if you want to read it. It's very nice. It was one of the books recommended by my current boss to read before I joined when I asked him for recommendations. It's a great book and it explains how all of this works, right? What actually it takes to build a good, how does VC investing work? So if somebody wants to learn VC, I think the best book for that is Power Law. So I think that highlights how venture capital works, right? And one thing that I think a lot of people get wrong about venture capital is that the idea is you'll fund anything new, right? It's a very specific funding model for a very specific kind of a company. And I say this like this is one of those lines which I think a lot of people in VC say, and I think it should be taken with a lot more value, is that not every good business is a VC fundable business. And that's because the inherent model is this कि यार I will invest in 10 companies, 5 fail होने वाले हैं, so the rest 5 has to do extremely well, and the number I am taking is the 9 will fail and the 1 has to sort of do really well, so that one should have that potential. So a good business still may not meet a VC funding requirement just because the VC feels that, oh, you know what, if I enter this into my portfolio, it may not exactly sort of build or give me enough returns, right? So less to do. Like sometimes it can be that the business is good, but it's not fitting the thesis or value. So that's actually a thing.
I have one more question. Like I think I read somewhere or somebody told me like these funds usually have the 10-year life cycle. Like is it applicable to every such fund?
Yeah, it's a regulatory requirement. It's 10 plus 2 if I'm not mistaken, which means
Yes,
10 plus 2 extended by 2 years.
Cat 2 and Cat 3.
All right. So
Cat 1 or Cat 2 both.
All right. So like what's the worst case scenario? Let's assume you invested in certain companies and we didn't see any IPO from that portfolio. What happens after 10 or 12 years?
You'll be out of a job.
No. I mean, what?
No, he's
it's
saying
just not about
exit
job. I mean, the entire
exit
firm
board,
I'm talking about. Firm level I'm talking about.
Yeah. So I didn't see. The thing is, if you have done well, right, the company actually should exit, which is why a lot of VC firms do focus on exits. Couple of things happen. There are a couple of ways around this entire aspect, right? One is you do a secondary sale at a deep discount, which is that you sell your shares to somebody else later down the road. Now, because you are desperate, same thing as a real estate deal, right? Like if you really want to sell your house, you'll sell it at a discount. Same logic. You really want to sell, there's no liquidity, you sell it at a deep discount, right? Okay. Second, you force the founder to list, which is a bad idea, and sometimes it doesn't happen. So every time a VC invests in a company, they have something known as exit rights. These come with a tenure, which can be 5 years, 3 years, 7 years, whatever. Usually it's 5. And they actually specifically mention that, I need an exit in these many years. If I don't get an exit, then these are the steps I can take to get an exit, right? Pretty standard clause. Some firms have it, some firms don't have it. So what that means is, let's say you will have, I can, get an IPO, I can sell it to a competitor, I can sell it to this thing. Usually, of course, nobody enforces that. What you do is you work with the founder to get an exit and you maintain that relationship. But yes, those there are recourses. You can do a secondary sale. You can raise a fund called a continuation fund and then buy your same shares to get
Okay.
around that fund as well. But that will have a different thesis, right? You can call it like there are a lot of continuation funds that have it where you might have it like, I'll do seed to series A in my main fund, and then rather than now that company has become Series B, Series C, I fund cycle खत्म हो गया पहले fund का. I'll raise a continuation fund just to back the 3-4 winners of this, so my LPs can keep on getting the exposure to these funds, and that happens at a fair value or a current or last round's valuation. The transfer will happen at that.
And
So that
also it gives the
there's
option
no
for new LPs to
Yeah.
join in,
new
the
LPs to join in.
winners already, the existing
Yeah.
winners.
So that's one other way that people do it. Then there are IPO sales, secondary sales, which is where the secondary sale market is growing in India now, because that's exactly what's happening. That fund cycles are coming to an end, and sub IPO nahi ho rahi. So there's somebody who needs to buy it, and they're buying it at deep discounts. The other is sometimes you'll do a M&A kind of an exit where a company comes in and buys it. So there are multiple ways. Sometimes even the other investors are willing to buy your stake at times in a secondary sale, because they're like, okay, your fund cycle is ending, my fund cycle is not.
Yeah. So like, I think, will it be a good idea to have a distressed VC fund that will buy all at discount and probably
There are
get
a
one
few that
big
are
winner?
coming up. There are a few that are coming up. But the point is, see, it's also that, right, that if the VC is not able to sell that stake, right, does that first mean that is it even a good company, right? Or is it just paper valuation, right? Sometimes they're not able to get an exit because the marked up value of that asset is larger than somebody is willing to pay for it, right? At the end of the day, liquidity as a definition, if you go on first principle thing, liquidity definition, at what price can I liquidate and how fast can I liquidate, right?
Right.
It may not be liquid at 500 million, but it may be liquid at 300 million. But I might have entered at 300 million, which is why I don't want to exit it, right? Because the
Right.
firm has not grown for whatever reason. So on my
Yes.
list, it's still marked up at 500, but actual valuation may go 400 milegi, for example, right? That can be a hurdle. So it's not, yes, in a way, secondary VC funds are coming up to help you get exit, and their entire strategy is this guy. Firms are desperate, there's a legal deadline, let me buy it at a deep
Capitalize
discount,
on
and
it,
then you buy it, and then you get your nice 20-25% IRR is your target. But very few firms, and it's still untested. Like, again, the ecosystem is still very young, right? Everything that happens positively is actually good for us, whether it's an IPO, whether it's a skyroot that gets a launch, right? That helps people sort of
Yes.
add trust in the ecosystem, right? Whether it's an IPO, whether it's an M&A, active M&A system, right? The larger the company grows and they do more M&A, that's also good for us. More capital flowing in is good for us. More startups forming is good for us, right? So everything is good. So, and a secondary fund coming and doing that, more than welcome, I would say.
Cool. I think I have just one question. We were talking about from investment perspective. Let's assume there is a founder, right, and he owns the company. On paper, we see, this company has raised this much million, and now founder is valued this much. But on paper, like at what stage that paper money actually start hitting the bank of that founder?
When the company exits. So usually, see, what happens is compensation of a founder differs from sorry. Yeah. Sorry, I just got a call in between. The compensation of a founder depends usually on how the founder is doing, how much they want to pay themselves, etc. So sometimes they're pulling out a salary as well in certain cases, usually beyond Series A. Or if they have obligations, you're happy to sort of they take a minimum salary and etc. that they take, right? So that happens. The other is usually one, they can do secondary sales. So when they reach a certain point and they want to sort of exit their stake, or at least partially exit, they may sell it to a VC fund that's incoming and take some liquidity in. But most of the time, what they do is they may borrow against the liquidity shares, or they might want to do an exit, which could be an OFS in a public market or when they get acquired. That's way more likely where they get liquidity. So I would say when they exit the firm, that's the most. And usually between that, there's a salary or a small salary that's being drawn at most points of time. But it's not high paying. But yeah,
All right.
big rounds, usually there's some liquidity that's created.
All right. Yeah, any more questions, Danish?
No, I think we had a masterclass on MBA and VC.
Right. We were just talking public markets all the way. So that was something new for us. Even that ISB thing, we were not aware that you get full toss and that to a free hit.
Yeah,
That was
I know. I really like that about the college.
I mean, we both haven't studied so much as such. So for us, it was very new.
I think I also sometimes, like, when people, like my juniors ask me, what did you study? I'm like, this is probably what I remember, but a lot of what I remember is this is the good times I had with my friends, or the fun classes. Like, we had a lot of experimental classes. I remember the most vivid chapter I remember is I gave a presentation on wheelchairs while being on a wheelchair because I had broken my foot. So I mean, those kind of memories, you can't really put a price on them. And they also teach you how to sort of adapt. Like pair mein lagi thi and we were discussing a topic and we had to take a empathetic topic. So we decided, we'll make a wheelchair. And so we used creativity, right? So I think those kind of things, you can't
This
buy
is like
it.
school days, like school projects. You remember the fun you had with friends, not the project that you made.
Yeah, exactly. Yeah. I mean, you learn a few things. I'm pretty sure they're in the back of my mind, but it's just the fun you have. And like, I mean, even the professors are so chill that you end up, meeting them off hours, grabbing a coffee with them or food with them, just talking about them at times. There were board games. We played frisbee with the prof. It was fun.
As you said, I mean, it's more like a vacation for you.
It's vacation. Like I also really enjoyed it. I think I had a great time.
Perfect. I think we got a lot of insights from Aryan, and I think we should invite him again. And this time we will be talking more about VC probably. So thank you, Aryan, for joining us.
Thanks for having me.
Thank you so much, Aryan. That was actually super insightful today. We'll need you again to break down probably some deals in the future, and when VC ecosystem is growing more.
Or maybe when your invested company does some IPO. That would be good time.
Yeah.
Right.
Great.
All
Good
right.
stuff,
All right.
Good stuff.
Thank you.
See you. Cool.
See you.
Thank you.
Bye.
So I think that was a lot of insights again on MBA and VC as well. We got a book recommendation for the first time, The Power Law, Venture Capital, and the Making of the New. One
of our viewer has just mentioned it, actually. Aryan mentioned it also. So in case you want that recommendation, Raj Shekhar just mentioned the book name is The Power Law, Venture Capital, and the Making of New Future by Sebastian Malaby. That's the author name. All right. Let's move on to the next story now, from private markets to public markets. And this time we are talking about Google. Yeah, the company which actually owns the internet. And it is doing something crazy. I think in previous episodes, we discussed how AI is changing a lot, not just for your chat GPT or your search engine and all, but from the philosophy of these companies also, what they are doing these days, right? So Google just declared their quarterly earnings. So let's have a look at this. And it has been a shareholder-friendly kind of company. We rarely see any disaster from them. You can see the metric, 24% growth in the revenue. Google Search doing 17% growth. Google Cloud Platform, which they have, GCP, it did 82% growth. And these are the numbers on year basis. And if we see, Google also have that Gemini ecosystem. So they also offer their AI services via APIs and all. So it says there were 16 billion tokens per minute. And at the moment, that's for the last quarter, actually, on quarter basis, the number is now 22 billion. That's a new metric, actually, after AI and all. So we can see clearly somewhere close to 40% growth in this metric. And YouTube is again a stable business at the moment for them. And they are also mentioning that they are very close to 1 billion active users on Gemini.
Wow,
So that's
that's a
like,
huge number.
I think world population is what, 7 billion, right? And that's like 14%. So that's double digit anyways, right? So these are the numbers. But the major thing which happened is the amount of, I mean, Google doesn't really need, funds, I would say. It's a profitable company in comparison to OpenAI or Anthropic. It makes profit from various division, as we just, you know, I would like to add something more. Yeah. So we were talking about how Google is doing things in AI. Google is a profitable company, so it doesn't really need those private rounds which OpenAI and Anthropic needs. Google makes money from so many, I would say, their services, the search engine, Maps. Maps is literally a monopoly. YouTube is like the television of the world at the moment. Nobody watches TV. Then they are able to do this GCP thing. We are talking about cloud, and at the moment they are also providing the infra. We are talking about tensor processing unit, which is GPUs, and we haven't talked about one thing which is used on your job, Google Workspace. So a lot of money comes from various kind of services, and that's why I always say Google is the kind of company which virtually owns the internet. And
Right.
I would like you to explain like what happened this quarter, which changed everything. Just to add it, yeah.
So, like our topic name is Google is paying the AI bill, right?
Mhm.
For the first time in 20 years, Google has burned cash. Like they call it the most reliable money printer in tech, but it went cash flow negative for the first time. And what that means is, by Google's definition, is that the operating cash flow that the company is making through the business, day-to-day business, minus the Capex spend, which is the spending that they're doing on AI infrastructure and other Capex, has gone negative. So they are burning cash technically.
Yeah, and that's the thing. So we are talking about, I think there are 3, 4 companies. Uh, I would like to add them on the screen. Yeah. So in last episode, we talked about how Apple is winning the AI war without even playing. But these 4 companies are actually playing this game. So these 4 companies, Alphabet, which is the Google parent company, Amazon, Microsoft, and Meta, all 4 companies are building the AI infra. And you can clearly see how much they are spending on data centers, servers. So I would say they are building the infra, or you can say the platform which these companies believe like AI gonna accelerate and it will require some platform or infra, right? These guys are
Right.
investing on those infra at the moment, and that's one of the reason how Dhanesh mentioned that Google went cash flow negative. So that's how bullish they are on this thesis that this thing gonna play out in their favor
Exactly.
in the future. At the moment, it
So
looks
like
like spending. Yeah,
like you're saying, right? Yes, the image is that they're spending recklessly, but
right.
they're sitting on over $200 billion in cash and marketable securities, right? So it's not a liquidity issue yet. They have lots of deposits and a lot of liquidity already. It's just that they are betting on the AI boom, and instead of doing buybacks like our Wipro is known for, like when they have cash flow, they are betting on the AI infrastructure for future revenue growth.
Right. And one more thing, Google is just not working on their AI infra. Google
Okay.
also, like, just to add, just allow me a second. Yeah. So, yeah, as I was saying, Google just doesn't invest in the AI infra. They also hold some major stakes in some interesting companies. So, Google got somewhere close to, I believe, 6% stake in SpaceX. And I think they also own 5% of Anthropic, which is actually a competitor to Gemini. So they also hold that stake in Anthropic. And Anthropic is at the moment valued at $965 billion. SpaceX just did their IPO. So I think the company was valued more than $1.2 trillion or something. And space in the SpaceX, Alphabet got 6% position. The position is valued somewhere close to $94 billion. So these are the investment which Google also making in interesting companies. That's one part of Google which we usually don't see. So that's the case at the moment.
And to give people a background, it was the first negative quarterly free cash flow that they've posted in over 2 decades, like almost 20 years since. And they are doubling down on the capex. It's not because there is stress in the company. That was the initial notion that company is struggling. It is because of the capex being doubled year on year to around $45 billion in a single quarter. So that's a huge bet that they're taking. And this has replaced the buybacks that they were doing earlier. They have stopped doing the buybacks, which IT companies usually do with the excess cash flow.
Right. And yeah, so that's a bet we just explained actually. They are building it, they are using it into their infra, and then they can also sell this infra to other companies, right? So that's the bet Google is working on at the moment. Market is not rewarding these companies, honestly. These companies have collectively invested somewhere close to $700 billion. I'm talking about Alphabet, Google parent company, Amazon, Microsoft, and Meta. And if you just check the returns of these company, I would like to tell you, like Meta is down 8% this year. Amazon is up just 2% this year. Microsoft is down 19% this year. And then we have Google, which is probably doing, I think, yeah, it's just a 1%. So market is not rewarding these companies at the moment, but these companies believe, let's burn the cash flow in this infra and have a long-term thinking, and then let's see what happens from there on. That's the bet at the moment.
Yeah, I think we are lacking someone in India doing the same, right? Companies of our stock exchange are still busy doing buybacks and giving dividends.
But there's a I mean, I would say, yeah, those guys could have taken a risk, but that's fine. This company doesn't really, as I said, so many earning sources and so many, like Google Maps is kind of a monopoly, like YouTube is kind of a monopoly, right? Search used to be monopoly. I mean, what was there? Yahoo was there, but at the moment, the search, people are raising doubts on Google search that people will be doing ChatGPT for their usual day-to-day queries. That actually affected SEO for a lot of blogs and other things, because now people are not clicking on those links. It's just, even Google is doing this using their AI mode. They are already giving you a summarized answer. So that has actually affected the earnings of bloggers who used to write on internet, and then they used to get website hits and all. But let's see what happens at the moment. The doubt of Google search being defeated by ChatGPT, they are handling it in a way that they have integrated AI mode, and you can actually chat from their search itself. That's what they are doing.
But do you use it, or do you end up putting your queries on ChatGPT or Claude?
Yeah, I do. I mean, I use ChatGPT for that purpose. But it's just a stickiness of Google at times. When you're working on Chrome, you just open a tab, whatever you type, it just lands. I mean, it saves you one step, right? For ChatGPT, you will be typing chatgpt.com, and then there will be search bar. It's just that search bar of Google Chrome, or I would say where you enter your website address, it acts as default search bar. So that's one of the reasons why I use Google search at the moment. Definitely not in the way where we type, google.co.in and then we search there. I think that theory is dead. And it's good.
That's why I think Google likes to have the entire front end to back end, right? Where because of Chrome, Google search is also getting the traction still.
That's why I said it's a good feature that they have built. Imagine that feature is not there, and then you are literally done. It's the similar kind of friction you will be having on searching things on ChatGPT and searching things on Google. So that's one thing, which is the reason why I'm using Google at the moment.
Interesting. Let's see. It's still early stages in the entire AI bets that they're taking.
All right, I think we should move on to the next story, which is yeah. So the number of the week is $725 billion, and this number is the current net worth of Elon Musk. And I think 2 weeks ago, we discussed, 3 weeks ago, we discussed how he is the first trillionaire, but at the moment, he has lost his trillionaire status and almost lost 50% of his wealth in just 1 month. And it's not a made up thing. I think recently I saw a tweet from him. He himself said this thing that, yeah, he's a former trillionaire, right? And the reason why this is happening is very simple. So on 12 June, SpaceX did the IPO at the price of $135 per share. And on first day, it closed at 161. And after a few days, it kept rallying. And on, I would say, in 5 to 7 days, it was close to 220 US dollar. So from 135 to 220 in matter of few days. And on that day, Elon Musk was actually holding a net worth of $1.45 trillion. But after that, the SpaceX stock is at the moment trading somewhere close to 110 US dollar. So that's a 50% drawdown in SpaceX itself. And Tesla is also bleeding. I think recently when I saw Tesla, just allow me a second. So in last 5 days, Tesla is down 19%. And considering like Elon Musk got his major stake in these two companies, so his net worth is down almost 50% from top.
Exactly. And like we can say, right, Elon Musk became the world's first trillionaire and then lost it all in a month, or half of it in a month. But it's the same man and the same company, right? Still nothing changed. And it is just the share price, like we spoke about in VC also, right? It was paper money. And just one factor change, which is the share price of SpaceX and Tesla.
And funny part is, he is like the second richest and third richest people are Larry Page and Sergey Brin, and the collective wealth of these guys is 500, close to $520 billion. So that's for the rank 2 and rank 3rd actually. So Elon Musk alone is richer than the combined wealth of second and third ranked billionaires in the world.
Or you could say he lost more in a month than the combined net worth of the second and third rank.
Right. And I was digging, like, how big is this number? Like $712 billion. Like, if you want to lose 700, so yeah, if you want to lose $712 billion, you need to lose 2 crore per second, 127 crore per minute, and almost $1 billion per hour. And on, I would say, it's like 4 Reliance Industries, which is the, you can actually buy 4 Reliance Industries sized companies from this amount. And that's a figure we were talking about, the fall in SpaceX and Tesla. It's on the screen. The black curve is for the SpaceX. It's down 40% from 16th June, I believe. And Tesla is also down 24% from that day.
I mean, it's quite interesting, right? The kind of wealth that he holds. Of course, it is still paper money, but yeah, I think you have to give credit to him still. Like, he takes it lightly, right? He still tweeted that, former trillionaire. Otherwise, it's tough to sustain such figures, right? Like in India also we say, right, whenever Adani takes over Ambani, the Adani stocks tank. Possibly it could be for SpaceX. Like whenever he touches a trillion, SpaceX or Tesla stocks could tank.
Yeah, but I think people think it in terms of losing their net worth, because when we define our net worth, it's usually very close to a relatable number. Like if your
Correct.
net worth is close to 5 crore in your 30s, then you can actually relate to that net worth. Like I can buy this house in 5 crore. Let's assume you are valued somewhere close to 15 crore. Again, you are able to relate that 15 crore. Okay, I can buy this penthouse probably. I can buy that car, right? But I think at that scale, it's more of a, like, this net worth is more of a weapon, because it's all equity, right? It's all on the shares or paper, as you say. It's more of a weapon how you can leverage it to take loans or those kind of thing. It's not about personal
I
expense.
mean, if he wanted to compare, he can buy countries, right?
Yeah, anyways you cannot compare such number. You cannot relate it such number, and anyways he was the first trillionaire. So that's the case. So
Yeah.
there is a, I would say there is a concept in physics which is the escape velocity, and I think this used to be the velocity which one satellite needs to escape this atmosphere, and I would say the impact of gravitation actually. So they just go out of the atmosphere. I think that's the theory. I think uh, after some point at your net worth, it's more of a escape kind of net worth. Like when you have reached that point or crossed that point, you are not seeing money in a similar terms the way usual people sees it, right? Like retire early goal or can buy penthouse from this number or those kind of things, right? So that's the case. I mean, it doesn't really affect him. It's more of a how it affects SpaceX. Like if they really need loans or those kind of things, it's usually hits those kind of things, not his personal wealth or not his personal lifestyle or such
Yeah.
things. So anyways, you learn such behavior as you are done with
Get
that
richer.
escape velocity or escape level, right? So it comes naturally to you at the moment.
So yeah, let's see. Like, hopefully, he comes back to the trillion. It'll be fun to watch his tweets again.
And that will be the first comeback of a trillionaire again. He became first trillionaire, and then it will be the comeback trillionaire. And worst case is, you know what? He could also become the first person to lose $1 trillion
Yeah.
if SpaceX and Tesla got some brutal drawdown or something in the future. Because anyways, at the moment he lost what, 725 or something, $720 billion. That's the most anyone have lost in their entire lifetime anyways, because nobody actually crossed this.
It's the most someone has earned also.
Yeah, nobody actually crossed that money. So that's the case at the moment.
And coming to our next topic related to Elon Musk, which is so I think before we go there, we have a question from Manish. In case of Elon, he was like beyond escape velocity, even when he was not that rich. I mean, going in all in every time on the next venture. What are your thoughts on that?
Yeah, that's pretty much true, and it's a personality kind of behavior. I would say he he was part of that PayPal team, I think, when PayPal got
Yes.
exit. Peter Thiel was also part of that company. So many, I think Peter Thiel at the moment runs some fund or those kind of things.
Yes.
He also got Carp on Palantir side. It was his company probably. I read it somewhere. But in Elon case, yeah, that's the case. He didn't
I think
really think of diversifying that income. It's mostly taking that bet, and when that bet works, you reach such heights, which has
I
been the
think
case.
he didn't do his MBA, so he's been betting on startups instead of doing a job. So that could also be one factor.
I mean, that PayPal mafia is anyways betting on startups, but
Yeah.
his way of playing is not about diversifying. It's about
Concentration.
having fun. Probably it's about pushing limits. Let's see what happens if we do this. That kind of behavior.
Anti-risk.
Yeah, and
Risk
maybe the
averse.
metric,
Anti-risk averse.
maybe his metric could be different, right? And
How
we got
much fun I'm having while doing any particular venture.
yeah,
Some benchmark probably
we got
in his mind.
one more
Yeah.
comment that Manish is saying that it kind of reminds him of the movie The Walk. The hero does things out of passion regardless of the result. Yeah, and that's true in his case. And one more thing, I think we read it somewhere. You cannot really beat someone who is having fun,
Yeah.
right? Who is doing it for fun. So that's been the case with him. Okay, so
we can
yeah, we were
also,
talking.
yeah, like one other guy who's having a lot of fun with all of
Yeah,
us. Uh, like we all know, right? He's having a lot of fun. He is the president of the United States, and his social media posts moves market. We all know that. And now
right.
his company, Trump Media and Technology Group, is launching a paid data feed branded as the Truth API or a Truth PSI from August 1st, 2026. And he is willing to sell Wall Street the chance to see his posts milliseconds before the public does. And it's like calling a subscription to insider information in broad daylight, right? Everyone knows this is there, and you could get access. And these high frequency trading companies that make fortunes in milliseconds could capitalize on this.
Yeah, so just to explain it further, so we are talking about US President Donald Trump, and I think few years ago, he used to be really active on X. Then X actually banned his account. And then he launched this social media network, which is Truth Social, which is the name of the company. And even at the moment, when we see, we are doing a ceasefire, we are having fun, we will blow them tonight. It's not his tweets, it's not his personal account on X. It's the post on this platform, which is Truth Social. So Donald Trump owns this social network. And that's where he delivers these news or mood swings, I would say, which makes the difference in the markets. Like, I have been the victim of this. I think 3 odd months I was long crude oil, and then suddenly I saw a post from him that we are good friends now with Iran, right? And then 3 hours later he's like, no, we're gonna blow them tonight, and I lost probably close to 1.4 lakhs in that trade. So yeah, at the moment, what he's saying in simpler words, that if you want my post before everybody else, or I would say, if you want to know how I'm gonna behave today before everybody else, you can actually pay money to me and I will let you know about it. So in technical terms, it's the API which he's offering, and the cost is probably close to $1.2 million per year. So that's a cost of
$1 lakh
that's
a month.
yeah. So that's a like this $1.2 million per year is the amount you need to get the breaking news around mood swings of Donald Trump, and then you
But
can
he
do
has been giving good stock recommendations, right? Dell and other stocks. Like people are saying that whichever company Trump is posting about on X, just a tweet, it has been doing well. And like you could be paying for a head start on those posts and get a head start on the market moving information, right? It's like proper insider information. But the difference is this time Trump will also be benefiting by giving you that information, by taking money from you for it.
So, and one more thing, I was thinking of, when these funds, I would say mutual funds, hedge funds, these guys are hiring people. So there are categories, right? You are hiring analysts, then you are hiring fund managers. In analyst, it's about sectoral analysts, right? In case of hedge funds, it's about the quant guy. It's about the portfolio manager guy. It's about the risk management guy. And I used to think these companies must be thinking, shall we hire one Trump analyst kind of guy? And at the moment, that time has actually arrived, because you can feed his mood swings to this Trump analyst guy, and he will be taking trades based on that actually.
Interesting.
And $1.2 million is not a lot of money for funds. It could be for retail investor, right? So I was just looking at a table, and so like if you are running a fund with $1 billion, annual fee is just 0.12%, and you can make bets quicker than anyone. And anyway, such funds spend so much on building their infra, especially those HFT funds. It's a battle of I would say who is making trades at faster rate. It's not about, I know this business, after 5 years it's gonna do this, and CEO is kind of, smart, industry gonna grow at 12% CAGR. The game at that level is totally different. It's about who is placing trades at the faster rate. That's it. And that's one of the reasons why these funds usually have, their offices or their infra closer to exchanges. So when you are sitting on your Zerodha terminal and pressing that buy button and using you are the fastest, there are people who are doing all this thing. At least I read a book earlier. In USA, people actually bid for such infra, like that optical fiber, to get the faster rate in receiving information and delivering information. So in case of delivering information, it's about what they want to buy or sell. So that's the case. That's how important this timing is in the markets at such micro level. Yeah, so that's what we are talking about. Let's see how it.
Yeah,
I don't
this
think
Trump media owns, I think, around 41%. Like Trump himself owns 41% in Trump media. So it's like you're paying Trump money to benefit from the information he's going to provide you to benefit financially. So it's a win-win.
Right. And even for a smaller fund, like somebody running $100 million fund, the cost is 1%. The annual fee, that certainly adds value.
And it's the businessman in him, right? His decisions are usually more business oriented. So this also makes sense. I mean,
and today I was also reading, there are people who got this countdown, like 900 days left in this term of Trump, right? And today he said, I think I should be president of USA again. Like I should be, contesting election again after this term ends for him.
So actually, by rule, the POTUS, which is the president of the United States, can be elected only twice.
Mm-hmm.
So he's not allowed for the third time technically. So probably he could get a change in that also. You never know.
Right. 3 years are good enough time to just change the constitution and make some new laws.
Yeah.
All right. So cool. We are closing close to 465 viewers tonight. Thank you very much, everyone, for joining this. And we will probably hit 500 number for sure again on Saturday night. We are also looking forward to your feedbacks and suggestion, counter argument probably. If you spot something which should have been different, everything is welcome at the moment. And you can do it live here in the comments. If you have any doubts also, you are free to ask us and we will be taking it on the feed. Apart from this, you can subscribe to our YouTube channel and follow us on X also. On X and YouTube, we keep on delivering whatever is happening in financial markets or a bit of tech, the updates and all. So yeah, that's all.
So we can now move to something more local. So the latest, hottest, I would say, the hottest topic going around right now is one of the IPOs that is coming up next week. It's having a GMP of more than 30%. So everyone has been going crazy behind this company. So here is the company name. is Indomim, and Dr. Krishna is the founder of this company, and he was an alumni of IIT Madras. So an alumnus gifted his old college, which is IIT Madras, some shares in 2024, and next week the shares go public via Indomim IPO, and IIT Madras is going to make 112 crores on that bet by selling the shares in the IPO. This is the story which is giving a lot of good feedback to the IPO markets otherwise, which have been facing a lot of backlash that IPOs are just coming to sell their stake and dump money, their shares on retail and provide exit liquidity. But IPOs aren't just making promoters and early investors rich anymore. They are making colleges and other education institutions also rich. And if this keeps on happening across top colleges, this loop is going to improve, is going to benefit all of us, right? And it's going to increase the investments in the endowment funds and startup funds of these firms, and you could have more IPOs coming from the same institution.
Right. So just to explain the basics around this company. So Indomim operates in the engineering, manufacturing, and industrial component sector. They usually hold specialization in metal injection molding, which is the MIM part here. So their end use market is automotive, defense, medical devices, and aerospace. So these are the kind of end use industry for their product or services. The price band for this IPO is 461 to 485 rupees per share. The final date for IPO will be 27 July, so it's already open at the moment. And the IPO is of 500 crore size, I think. All right. So that's a fresh issue. The total offer size is 3,800 crore, which is the overall size. Yeah, 500 crore is a fresh issue.
Right.
So
And
it's already
Krishna,
open, I think.
yeah, and Dr. Krishna was part of the 1970 batch of IIT Madras, and he gifted around 46 lakh shares to IIT Madras in 2024. And in this OFS, which is part of the 3,800 crore mainboard issue, IIT Madras is selling half of that gifted stake in the IPO of around 112 crores, and it will continue holding the rest of the 23 lakh shares.
So, and I think that's not new. Like these Harvard, Stanfords, and all these universities, I think also invest in companies.
Right.
They separately run their funds. In that case, I don't know what happens at IIT Madras. They are anyways getting over 100 crore from this IPO, but I don't know whether they have a fund kind of structure. But in Harvard's
They
and
have an
Stanford's of
incubation cell. They have an incubation cell. Like you must have heard of Aether Energy, right? They were part of that story as well. So they have the IIT Madras incubation cell where they help and have the platform of startups and supporting companies.
Because what I have read about those Harvard or Stanford, I think it's usually a hedge fund or I would say mutual fund kind of structure. They are very active in those kind of things with such money. So it's a proper fund in that case.
Right.
This thing could be accelerating in India.
Yeah, here it's more for incubation and startup, early stage startup culture where they provide initial capital, like we spoke about in our earlier segment, where ISB is providing 50 lakhs to a person with an idea to execute their startup idea. So these funds in India are more on those levels instead of the scale at which Harvard and Stanford are to invest, like a mutual fund or a private or public market fund.
Yeah, because Google was actually founded in Stanford by their founders, and Stanford actually received more than 1.8 million Google shares, and it was due to their PageRank patent license. I think that license was probably in collaboration with Google founders and Stanford University, because Google was actually a research kind of project before it became a company. So that was, I think Google was founded in 1998 probably. Just allow me a second. Yeah, so Larry and Sergey actually were PhD students at Stanford University, and they established this in 1998. And it was a research kind of project. So that's why Stanford actually got 1.8 million shares of Google. And probably we are starting those phases. As you said, Ether Energy was also the company which received funds from IIT Madras or started from here on, right?
Yeah, I think even Sedemac was another IPO that was having IIT Bombay backing. So probably it's a start of the wave that US has been going under, where education institutions are also part of this boom of getting rich with the promoters exiting through IPO.
Right. Let's see. No recommendation, but I think both of us will be applying for this IPO.
Yeah, I think they have made it's like a global leader, like from IIT Madras in a way, from the founders, that they own, I think, 7 to 8% of the share in that MIM segment. So it's such stories are always inspiring.
And in my case, I'm happy if I just get some allotment and make some gains on listing day, and inspiring stuff for the later business. We will see. At the moment, this will be my focus.
Yeah, let's see. I will not sell on listing day if I get allotment, unless it lists above 50-60%.
Yeah. So I think most of the people will be applying, considering the gray market premium, which is actually a great thing, but people trust it more than the financial and all, right? Because it's about listing day gains.
Yeah,
all right.
and
So we just crossed 500 viewers actually on this stream. Thank you very much for joining us again.
thank you.
On the
That's
7th
actually,
episode.
again, a good number on the 7th episode.
And now we will be taking some questions on any topic, whatever we discussed, any suggestion, because we are doing the 7th episode. So there must be certain changes which you would like to see. And we are already witnessing one change. The dressing sense of Danesh just changed actually after 6 episodes. It's not black. We got this question last time.
All we have to do is by the 10th episode, we have to get Sumit to change his polo t-shirt, black polo t-shirt.
Let's see. We will be taking suggestion from you all at the moment.
He's open to getting gifts also if someone has to change his outfit. So I will be sending him one, and any contributions, I'm open to.
There should be a polymarket contract on this thing. Yeah, so let's wait for a few minutes and let's see if we have some feedback from our viewers.
Or any questions regarding any of the topics that we have covered.
And by the way, we are also on Instagram now, so I will be pasting the link. Just allow me a second. So we are covering YouTube, X, and Instagram now. So just sharing it in the comments. All right, we got one suggestion. We should drop our Google Pay, Paytm like a super chat or something. Thank you very much if you consider us for this thing, but we are really noob on YouTube side. I think we need to figure this out pretty soon, but still means a lot if you're thinking on that perspective for us.
I think the best super chat could be if you tell us how to hack YouTube as a growth specialist.
So we have shared our Instagram handle on our YouTube live chat. Yeah, 2 hours done. We got 500 viewers, great number. And we don't really see this lack of feedback as negative thing. We simply assume you really liked what we did. And yeah, on that note, we will be closing the show tonight, but we will be back again on all our channels, as we mentioned, on next Saturday, covering interesting stories with some great guests delivering some great insights over topics which you want to listen. So also, you are like free to suggest us guests or topics if you want to see us. If you want to see a discussion around those things, we are happy to take that. All right, we got a positive feedback finally. That's what we are assuming, right? Amazing show. Thank you very much.
Thanks,
Thank you.
Rajshekhar.
All right, I think we should close the show.
Yes.
All right, thank you again. See
Thank
you
you,
next
guys.
Saturday at the same time. Take care. Have a good Sunday.